Hi everyone, so today I'm going to be doing a new video on the returns of gold, silver, and the S&P 500. So let me go ahead and share my screen and we'll get right into it. All right, so share screen. And just to take a look here, stock versus gold and silver. As you can see here, this is the past 50 years, right? S&P 500 is doing very well. This includes the all dividends reinvested, so keep that in mind as well. Dow Jones comes in number two, gold comes in number three, and silver comes in number four. This is 50 years. Now, if you look more recently to 10 years, for example, the S&P 500 is still doing very well. But you could see here, it's a little tough to see, but gold is almost catching up. Right now, as of today, you have S&P 500 243% returns over 10 years. Gold, 231%. So S&P 500 is still beating it out, but gold could catch up eventually. And we'll see. We'll see. Maybe gold is the next best performing asset for the next 10 years. We'll see. Silver is coming in at number three at 197%, and Dow Jones coming in number four at 179. So silver actually took over Dow Jones this year alone. If we check the past 30 years, gold is crushing it still. Dow Jones is still edging out gold, yeah. S&P 500 is still the king of all of this. They're still beating everyone, but I don't think the returns are bad. But again, you have time periods where, for example, if you check here, post financial crisis, where silver was beating everything by a wide margin for years, right? So, but eventually S&P 500 always catches up, right? 80 years out, S&P 500 is crushing it. I mean, just a look, it's like over 40,000%, and then 100 years being dramatic. Wow. We have over 55,000% return. They're beating everything. So you could see obviously after a long-term horizon, S&P 500, Dow Jones, but S&P 500 more specifically with dividends reinvested is going to crush everything else by a big range, by a long, long range. So just to give you some perspective on that. Now, if we check this, this is including dividends, but it's a little bit deceiving because I had to look it up myself. The returns on this are correct, yes, but it's the same return as I was reading, 243%. However, why they say including dividends for this is they say total return index, which is a specific ETF that you could invest in. So they're just giving you another example of a different ETF. Instead of investing in the S&P 500, you could invest in this ETF, which is the MSCI USA. This is the total return index for that. So and this has the best returns out of everything else. Check 100 years too. They're crushing it. So you could just obviously see that they're doing very well, right? And that's when it started. That's what they're saying. 1999, right? So just to give you an idea. Now, if we check the gold spot price versus S&P 500, it's in euros. Let me switch it to dollars. So obviously, again, gold is going to be a little bit lackluster here too. Now, this is a bit of far ways back. I think this is 1992 what $10,000 would be. So S&P 500 still crushing it. It would be worth what is that? 294,000. This is in July, so it's a little bit late. And gold would be worth 93,000. So obviously S&P 500 really came out as the better performing asset. Gold spot price 6.92% compound annual growth rate. S&P 500 10.6%, 65%, right? Annual returns, this is just a breakdown per year of how they return and who beats what since the 90s, it looks like, and the average return over the last 20 years. So gold spot price, S&P 500, you have gold beating it actually last 20 years. Total return generally indicates that it does include dividends. So I don't know why above it says that S&P 500 past 20 years was crushing and now it's not. So that's a little bit weird. But just to give you other perspective, that they are still, I would say S&P 500 is the better asset class because this chart above obviously says that your money would be more than double. So if you invested 10 grand back in 92. So obviously I'll probably go by that more than this little chart here, the average returns here. So just to give you something of perspective to think about when if you're looking to invest in gold, silver, or any other asset class. All right, thank you everyone. I appreciate it.